Disruptive technology is shaking up the banking industry and giving rise to unexpected players. So how do banks respond to these emerging threats and still manage to remain relevant? Stuart van der Veen, who's disruption lead at Nedbank Corporate and Investment Bank, joins me with more. Stuart, thank you so much for your time this morning.
Thank you so much for having me.
Stuart, if we can start off with some of the factors that are actually driving disruption in banking, what are they?
We just had the discussion around the factors driving this globally. And I think it's the rise of talent and new skill sets and technologies that are moving quite quickly, being driven heavily by capital allocation globally. So if we look at 2017, just under $17 billion was allocated globally to fintech alone, let alone agri-tech or insurtech and some of the other segments. So these are the main driving factors. Secondly, I think it's the awareness and demand from new generations coming through that they want more flexible ways of working. And so you see the rise of the startup revolution globally, and obviously and naturally going after some of the value chains that are established and incumbent businesses has curated over the past.
What does it mean for an incumbent business, a behemoth like Nedbank? Does this necessitate a change in your very business model?
So I think for Nedbank, becoming a 30,000 person startup is what we're after. And I think that that's a beautiful idea in itself. It's a better way of working, a new way of working. We've got three main pillars in the bank. One's called managed evolution. It's how do you squeeze the juice out of the core. Then we've got what's called digital fast lane. How do you digitize front end and roboticize middle and back office? And then we've got disruption, which is what I lead. And that's how do we create new client value propositions 3 to 5 years from now. And we're finding that massively interesting.
Talk me through that. How are you actually creating these new value propositions?
Sure. So we've got three objectives and key results underneath each of those. One is to advance the ecosystem, so to access this talent and to actually understand the trends globally. And then we've got establishment of experimentation and commercialization capability, and then plugging into global VC deal flow. Those are our three objectives. The key results underneath each of those, which is what myself and my team focus on, is how do we identify the top 100 disruptors globally in a 6-month period? How do we then identify 12 collaborations across the group, retail, business banking, wealth and insurance, corporate investment banking? And how do we progress that through to experimentation to validate very specific questions? For example, often our first hypothesis we want to test is this creates client value or delight. If it doesn't, we don't necessarily see a reason to pursue it right now, or we can park it. Once we've validated that, we actually look at the business case, whether it makes sense, and the experiments that we need to run around, need to work to validate that. Once we've done that, we move into commercialization. So we'll take one through to commercialization on a rolling basis. And then on the VC side, we table 20 opportunities in a 6-month period, and we take 6 through to our pre-investment committee and 3 through the investment committee. So I think one of the dangers here is getting lost in a very noisy and fluffy space. And we believe disruption's a science. So I can give you an example of one that's touched each one of those elements. It's called Aerobotics. So Aerobotics is a startup based in Cape Town. They build analytics on top of drone and satellite imagery, effectively looking at tree health and canopy size, height and volume to build very specific precision farming tools for clients. Our first hypothesis was to validate that this created value or delight for a client. And we're almost immediately able to do that with our first experiment. We've completely doubled down with this and are finding applications across credit and risk for the bank to better serve clients in terms of understanding yield estimates and forward price future cash flows and underlying biological asset valuation. And we're starting to see what possibly could be automated agri-finance, which is incredibly exciting for us.
But Stuart, now technology is moving at such a rapid pace. In evaluating these opportunities, how do you ensure that they're actually going to be relevant in that 3 to 5 year time frame that you're giving yourselves?
It's difficult to forecast the future, and that's why we're not talking about the future, we're doing, and it's why experimentation is so important to us. Often some of the business cases aren't necessarily making sense. When we collaborate with a client and a tech collaborator, we're working to figure out exactly when this will make sense and what application would look like. We want to be ahead in our thinking around this, and we want to build these value propositions with clients. It's always difficult to say what is going to win in a space, but the only way to know is to do.
As it stands, what do you think is going to win?
So we're fascinated right now with flying things like drones, drastically reducing cost of accessing imagery. Also satellite imagery, the resolutions aren't necessarily as good as you need them to be. And you can use different light spectrums or very specific light spectrums with flying things. We're seeing computer vision rapidly advancing. That's essentially detecting objects and events using video imagery or still imagery. And you can imagine that being applied on top of drone or satellite imagery. And we're finding distributed ledger technology incredibly interesting. The reason being is that in a world where machines speak to machines, we need programmable and automatable money. And for us to be able to position inside of that, we need to be experimenting. So that gives you an indication of where our thinking is and where our focus is in terms of base reality. If you look at extending that further, simulated reality is also deeply interesting. You're seeing cheaper and cheaper headsets coming out with higher resolutions becoming untethered. The experience inside of simulated reality is improving. You're seeing greater adoption. The information platforms are doubling down for this being the platform post the mobile world. So for us, once again, it's how do we know what we don't know in this space, and how do we experiment with clients to create the space to participate and benefit from these new realities.
How does something like drone imaging and virtual reality or simulated reality actually link to banking?
So if you take drone imagery, for example, and you overlay, let's use the agricultural example because we've been speaking about it. If you're able to determine yield estimates from that, allocating tree health and canopy size across each individual tree, then determining those as drivers for yield, you can take yield times forward price to give future cash flow, and you've got an underlying biological asset valuation. Once again, you've got a fantastic distribution channel to the market to best serve a client. So for us, it's absorbing this information and interpreting it into something that can better serve a client with the right financial product and service that they need. So that's how you tie that back.
Stuart, on that note, that's where we're going to end things. Thank you very much for your insight. Stuart van der Veen, who's Disruption Lead at Nedbank Corporate and Investment Banking.